All right, let's get right into it. Today, we're not here to give you financial advice. Nope. Today, we're putting on our detective hats. We're going to investigate a fascinating mystery, one that's hidden right inside a stock chart: the absolutely catastrophic collapse of a company called CJET. So here's the scene of the crime. Back in July, this stock was doing just fine, trading pretty comfortably above $1.50 a share. Fast forward just 2 months to September, and it has completely collapsed to under 60 cents. I mean, that is a staggering drop. So the big question for our investigation is, how on earth did this happen? And what clues can we dig up from the data? We're going to tackle this just like a real detective would, sifting through every piece of evidence we can find to build a clear picture of what exactly went down here. So, let's get started. Okay, first things first, in any investigation, you have to establish a timeline. Before we can even begin to understand the why, we have got to nail down the what and the when of this stock's collapse. Now this is where the drama really starts to unfold. Through July and August, everything's pretty sleepy. The stock's stable, not a lot of trading going on. Then boom, early September hits. The bottom just falls out. The price plummets, and look at that volume. It explodes to 48 million shares. But wait, it gets crazier. By the end of September, the whole situation has devolved into absolute chaos. We're talking extreme volatility and a volume spike of, get this, 1.7 billion shares. This wasn't a gentle decline. This was a high-speed wreck. With our timeline locked in, it's time to bring out our first set of forensic tools, the trend indicators. These are going to help us see if there was some powerful underlying current just pulling this stock in one direction. Think of it like this. Before you jump into a river, you'd probably check to see which way the water's flowing, right? That's what trend indicators do. They give us the big picture, the main direction of the flow, ignoring all the little ripples and noise on the surface. And wow, this really paints a picture of just how strong that current is. Imagine you have two runners in a race. The short-term runner, our 5-day average, is moving at a snail's pace, about 16 cents. But the long-term runner, the 200-day average, is way up there, cruising at over $1.60. That massive gap, that gulf between them, tells us this downtrend isn't just a phase. It is deeply, deeply entrenched. But hold on, here's our first piece of contradictory evidence. The MACD indicator is flashing something called a bullish crossover. Now that sounds good, right? But you gotta look closer. See how both lines are way, way down in negative territory? This isn't a sign that things are about to turn around. It's more like a sign that the powerful downward momentum is maybe starting to get a little tired. It's a tiny flicker of hope in a very, very dark room. And if we had any doubts about how strong that downtrend is, well, the ADX just erases them. See, with ADX, a reading over 25 is considered a strong trend. We're at over 44. That is exceptionally high. This is basically forensic proof that the downtrend is an incredibly powerful and established force. So the ADX told us how strong the trend is. Now the Arun indicator tells us which way that trend is going. And while the evidence is pretty overwhelming, isn't it? With Arun down crushing Arun up, the data is basically screaming at us that this powerful trend is pointed straight down. So far, this case seems pretty straightforward, right? A powerful, long-term downtrend. But this is where the plot really starts to thicken. We're moving on to momentum oscillators, and these are the tools that often reveal the hidden story, the potential turning points that the big trend indicators might miss. And our first big momentum clue comes from the RSI. Think of it like a rubber band. This reading of 30.66 tells us that the selling has been so intense it has stretched that rubber band to its absolute limit. It's in what we call oversold territory. And what happens when you stretch a rubber band too far? It has to snap back. This suggests a bounce could be coming simply because the selling has been so extreme. Okay, so let's set up the central conflict, the main paradox our investigation has just uncovered. All the evidence so far, including this RSI reading, tells us the price is weak. It's beaten down. It is completely oversold. But here's the twist. While the price itself is weak, the momentum of that momentum, basically its rate of change, has suddenly and very sharply turned bullish. Now, this is a critical piece of contradictory evidence, and it totally complicates that simple downtrend story. Let me show you what I mean. This slide right here lays out the conflict perfectly. On the left, the standard stochastic confirms what we know. The price itself is weak. But look at the right. The stochastic RSI, which measures the momentum of that weakness, is showing a huge bullish surge. So, to put it another way, the car is still moving incredibly slowly, but the driver just slammed their foot down hard on the accelerator. That's a major conflict for our investigation. And if we needed any more proof of that sudden acceleration, here it is. The CCI indicator is at 223. For context, anything over 100 is considered really high. This extreme reading reflects that violent high-volume bounce we saw in the timeline, and it's just more proof that there is a powerful upward thrust doing battle with that massive downtrend. Okay, we've got the trend, we've got this really weird conflict in momentum. Now, let's look at the volume and the volatility. These clues are going to tell us about the conviction behind all these moves and just how risky and chaotic this whole environment has become. And the conviction here is it's off the charts. We saw this in the timeline, but it is worth repeating. 1.7 billion shares traded hands in a single day. I mean, that's not just regular trading. That's a climactic event. It's a massive, all-out war between buyers and sellers playing out in real time. And this slide just captures that chaos perfectly. The money flow index, which is really sensitive to what's happening right now, is showing intense short-term buying pressure. But then you look at the Chaikin oscillator, which measures the flow of money over a longer period, and it's deeply negative. It's confirming that long-term selling is still the dominant force here. What we have is a short-term buying frenzy happening inside of a long-term selling storm. So just how dangerous is all this? Well, the volatility indicators are giving us a crystal clear warning. The Bollinger Bands are stretched incredibly wide. Think of a river that's swollen into a raging flood where you can't even see the banks anymore. On top of that, the average true range, or ATR, is extraordinarily high. All the signs are pointing to one conclusion. This is an extremely unstable, high-risk, and, frankly, dangerous situation. All right, it is time. We've gathered all of our evidence. We've seen the timeline, we've analyzed the trend, we've uncovered these conflicting momentum signals, and we've measured the chaos. Now, just like a detective summing up the case for the jury, let's put all these clues together into one final cohesive outlook. So, what has our investigation revealed? It's a story defined by a clash of incredibly powerful forces. First, the primary dominant trend is still, without a doubt, bearish and deeply entrenched. But second, there's this powerful cluster of indicators suggesting a violent battle is underway, and maybe a potential bottom is forming. And all of this is happening in an environment of extreme volatility and incredibly high risk. And that leaves us with our final, tantalizing question. The data tells the story of a fierce conflict between the long-term sellers and a new army of short-term buyers. So, is this stock a falling knife that you wouldn't dare try to catch? Or is it a coiled spring, compressed by immense selling pressure, just waiting for the right moment to leap? The charts show the battle, but the final outcome? Well, that's a story that's still being written.